Hello everybody, and welcome back to another video. Today's video is going to be about building a narrative and executing on your trade. So getting right into it, we obviously saw large expansion on the S&P and NASDAQ today. This is a 1-minute chart, and we are going to be staying on a 1-minute chart for the entirety of this video. By no means am I negating the higher time frame, but for this specific structure and what I want to discuss in terms of value and key takeaways that I want to share with the community, we are going to be looking and dissecting this 1-minute order flow. So this is the S&P 500, and as you can see, the bottom of the chart, you'll see the time intervals. So you'll see the last candle here, I believe, is actually 11:49, and that is going to be significant. We're going to discuss how this structure played out and how we can build a narrative and really understand what we're waiting for in terms of a trade entry and that entry criteria. So as I go through these slides, because this is a presentation, of course, you see the text and the borders in each corner here. Pause the video at any point where I ask questions like you see at the top of the screen here. What do you see? I'm going to put a little lipstick, a little annotation on every single slide to kind of build this narrative. And if you do pause this video before I continue to the next slide, you really want to dig in and ask yourself and try to look at the structure, particularly in relation to what we discuss on this channel and how I specifically internalize ICT concepts, but of course ICT's teachings as a whole. So right off the bat, what do you see here? I'll give it a second, but of course pause the video. So right off the bat, we see relative equal highs and relative equal lows. So if you look at the structure on where we are delivering from in the left side of the chart, you see that we have large expansion lower. So typically after large expansion, what are you going to see? You are going to see consolidation. Okay, so once you start to see the market consolidate, it's engineering a new range. And a lot of times it will engineer structure like this where we have relative equal highs and relative equal lows. I have discussed this on the channel before, and virtually most days inside of the Discord community. If we have engineered liquidity on both sides, you just want to sit on your hands, stay patient, and see if we get a setup purging one of those sides to target the opposite side of the range, excuse me. So here we've identified relative equal highs, relative equal lows. What else have we identified? The intraday trend is bearish. So we saw large selling, large bearish delivery to start the initial portion of the AM session following 9:30 open. And now we have consolidation. Okay, so we'll continue forward. And what is more important in relation to just looking at this chart and just looking at these 1-minute relative equal highs and relative equal lows? We have last Friday's low. And see how the relative equal lows here in the 1-minute chart that we already established are falling just short of last Friday's low. I'm internalizing that as engineered sell-side liquidity. Okay, now is that some fancy word? No, that's just my way of understanding these liquidity pools. I am looking at that as the algorithm engineering or building that liquidity just to be returned to later. Now, I've had a couple videos recently discussing engineered liquidity specifically, and if you guys have been in Discord or if you guys are in RTO watching this, you guys know what we look for and the signatures and what kind of fits the criteria to classify certain liquidity pools as high probability or engineered liquidity pools. Okay, but if we have a bearish trend intraday following 9:30 open, okay, and we start to see engineered sell-side liquidity after consolidation, that can be a very, very good target. So if you were in a short from the first leg down, great job. But if you were not in the short and you were waiting to get involved, right, just to wait for something clear to you, it's things in setups like this that reward you for being patient and not just entering something, chasing or hammering your bullish bias if you had a bullish bias, right? At some point, more likely than not, something is going to be clear to you at least at some point in the day. Now, does that mean you're going to have a 100% win rate? Of course not. But you really want to try to enter your trades with logic, with a clear draw on liquidity, and with some of the other signatures that we are going to continue to discuss. So we've identified we have lower time frame relative equal lows, and we have those lower time frame relative equal lows falling just short of a daily low, last Friday's low. So I'm looking at that as engineered. Now above, we have relative equal highs as well. So what did we discuss in the last couple videos? If we have our liquidity pool to target, which again, these relative equal lows in last Friday's low, we want to see manipulation before we get a setup targeting that engineered sell side liquidity pool. Okay, so again, something else we discussed is we want to see as much engineered sell side liquidity left while the manipulation is taking place. So we've identified engineered sell side liquidity, and now moving forward, we need to identify the dealing range to understand where that manipulation could occur. So we want to see, of course, price reach higher, and we want to see it leave or not sweep the relative equal lows in last Friday's low. Okay, now look at these new annotations I've added to the charts. We'll actually start at the high here where my cursor is. Okay, we have our dealing range high. Now, why is this my intraday dealing range high? And you can even classify this as refined dealing range high. We've spoken about this on the dealing range video on the channel before. I know a lot of you guys have found great value in that. But here, if you look at this wick, look to the left. We're delivering off this 1 minute bearish fair value gap, or SIBI. Okay, when we have that, even if we don't have a liquidity sweep that traditionally constitutes a dealing range high, since this is an algorithmic signature and then we see large expansion lower, I'm classifying this as a refined dealing range high. Okay, and this helps me gauge a more refined dealing range if we're going to continue to reach lower for any sort of engineered sell side liquidity pool or discount inefficiency. And what have we established already? We do in fact have an engineered sell side liquidity pool with these relative equal lows and last Friday's low. So this is our refined dealing range high. This is our implied dealing range low. Now this is important. If our bias and our assumption is that price is going to continue lower to this liquidity pool here, I'm going to use, since it's in close proximity, I'm going to use this last Friday's low as my implied dealing range low opposed to this. Now it's not a great difference, but as you'll see, and this can be your homework, if you were to just run your Fibonacci from this low here to the dealing range high, the same dealing range high that I've discussed and that you see here, you'll see that price will reach up, but it will fail to get to equilibrium. So when we have stuff like this where we're falling just short of a higher time frame sell side liquidity pool, in this case because we're bearish, I'll use that for my implied dealing range low to get a more refined equilibrium level. And we'll see how that plays out as we continue throughout the presentation. But you have your implied dealing range low, your implied dealing range high, and this right here, your implied dealing range equilibrium. Okay, so moving forward, now that we've identified what? We're in consolidation, so we are waiting, right? We have a engineered sell side liquidity pool in the same direction as the intraday trend. So best case, we want to wait to see if we get a setup targeting that. So we want to see price manipulate first. And where is it going to manipulate? Above these relative equal highs into a significant inefficiency and a premium of this implied dealing range. So see how we're starting to build a narrative. So we're starting to, I use this terminology in this kind of framework a lot. A lot of traders get greedy with chasing, with holding their runners or their trade entirely and not taking profit and only really trying to get home runs. And then it comes back to stop them out, right? We're not greedy in that regard. We are greedy in the signatures we demand for our setups. We want to have really, really high probability setups in terms of the signatures, the technicals, but we want it to really be difficult to argue the opposing direction. So right here, I'm saying, on top of everything we've already said, I want to see price run up first, leave as much engineered sell side liquidity as possible, purge these relative equal highs, right? And why is that important as well? It's the equilibrium fair value gap. So this is a significant inefficiency. The first fair value gap right at equilibrium of this refined intraday dealing range. Okay, so we're starting to build a narrative and really starting to frame a trade idea. Now, does this mean we just get short right now? Of course not. We still need to see the manipulation A, and then B, we need to see the setup actually form, and we need to be able to frame risk, a stop loss and a target. So let's continue forward here. We discussed the equilibrium fair value gap, right? when we've identified the dealing range, we've identified where we want the manipulation to occur. We also want to identify certain algorithmic signatures. Now, in this case, since we are bearish in our analysis and we want to have a setup targeting these relative equal lows down here, this engineered sell side liquidity, we want to see manipulation as we've already established. But before we get our setup, we're saying best case, the algorithm doesn't come up to this inefficiency. And of course, this one above here, right? But why is that important? Because that is the algorithm, that is the market telling you it's weak and does not want to come up to this fair value gap. It's only coming up to a very, very short-term premium of the refined dealing range to purge highs and then offer smart money another opportunity to get short before reaching the target. Okay, so before we even start to deliver and expand up here to these relative equal highs and just above where you see current market price here, you're saying, okay, this could be a really clean setup. If they leave these equal lows, okay, they run the highs, and then we see a short setup, but especially if they fail to reach it up to these SIBIs, these bearish fair value gaps, and they classify as breakaway gap. That is a strong, strong algorithmic signature. And actually in the previous video, now I recall, we discussed the same exact logic, but just applied it to the higher time frame. So it's all just the same tools, the same way I internalize order flow, look for algorithmic signatures. I'm just trying to build a narrative and understand when it is the right time to execute, okay? So let's continue forward. Perfect timing. We're gonna discuss macro opening price. And you guys know, who have been on the channel, who has been in the Discord for a while now, how I utilize macro power of 3 and also how beautiful it is if you are just patient and wait for setups like this. Now, does this mean macro power 3 is the only setups that I take? No, of course not. But when these setups do present themselves, they are beautiful, and I'm extremely, extremely confident in this. So again, we're waiting for time to align with price, and that is exactly what is occurring here. So note how I fast forward one candle. This is 1150. So you see your macro opening price. Now for macro power of 3, you want to see price expand above that macro opening price and do what? Sweep, since we are bearish, sweep buy side liquidity and or return to a significant premium PD array. Okay, in other words, manipulation above macro opening price. Okay, so we started to build our narrative in terms of everything we talked about here, wanting these to be left. And right away, we start to see price go above macro opening price right at the 1150 macro. So let's continue forward, okay? And we see that this manipulation indeed has occurred. Okay, so we're still waiting for the setup. We're saying manipulation has occurred. The relative equal highs have been ran. We delivered to CE of this equilibrium fair value gap. And note, if you kind of draw an imaginary line across the screen here, where this implied dealing range is here, you're seeing that the algorithm is sending price to deliver to CE of this equilibrium fair value gap, which is the first thing right above the implied dealing range equilibrium. So as a reminder, the dealing range high is here. The implied dealing range low is last Friday's low. And if you get your 50%, it's going to be this level right here. You guys will see it on your charts. And you guys should be doing your own due diligence as well and looking at your own charts and doing your own review as well. Okay. So now we're saying manipulation has occurred, right? What is next? We are waiting for entry. So we want to see, as we've already discussed, this fair value gap remain as a breakaway gap. We don't want to see the market go up there. So we see this BISI, this bullish fair value gap right here. And note how I'm using the volume imbalance for my anchoring, okay? We see this BISI get delivered to. That was utilized to send us higher, to purge this high once more and deliver us to CE of that equilibrium fair value gap. So all we're waiting for, everything's checked out now. We've left the engineered buy side liquidity. We're seeing macro power of 3 occur right in front of our eyes. We're seeing a sweep of buy side liquidity, prices above macro opening price. It's referring to the tick to a significant premium PD array, which of course is the equilibrium fair value gap. Now all we are waiting for is a close below this BISI. Now why is this a high probability macro bearish inversion when we close below it? Okay, because it was utilized to send us higher, plain and simple, right? And right here on this candle's close, that is when it becomes valid as a high probability macro bearish inversion. Okay, and these are extremely, extremely powerful PD arrays to utilize. right? Especially, of course, during a macro and when it fits a narrative like this. So after this close, you're putting your sell short limit at the bottom of this macro bearish inversion, and note where my stop loss is, right? So the general rule of thumb is that you can put it above the swing high, the last swing high above when we are bearish, the inversion, okay? But we can refine it, and there's real logic here, to things like this, the breakaway gap, okay? Breakaway gaps and high probability inversions, you guys in Discord and RTO have seen this, and we see it all the time, are going to become your best friend. And it might be off the top of my head, it might be my favorite kind of 1-2 punch in terms of signatures in the market, okay? Because we can really get an idea of A, what we want to see in general, but B, where we can kind of refine our risk, okay? So yes, in this case, as you'll see, both of the stop loss placements would have been the same. So you could have put your stop loss above the swing high, but if that's too much for you, or you just want to refine risk and be conservative as much as you can, right? You can put it above or at the top of this breakaway gap, because you're anticipating that this bearish inversion is going to act as a smokescreen. In other words, price is not going to get up to the breakaway gap. So of course, by extension, a stop loss up here should be safe. So you can refine it when you're bearish to the top or a couple ticks above the breakaway gap, okay? And of course, we do see price close below, return to the high probability macro inversion, okay? And just for the icing on the cake, we see an SMT here beautifully, sell off aggressively, and reach our target, okay? So all these signatures, right, they are so clean when they fit your narrative, when it's the correct time of day. You just have to be patient and wait for the setups, right? So as I mentioned already, you guys want to make sure you guys are doing your due diligence in your own charting as well, okay? If you are in Discord, if you follow me on Twitter, you probably saw this announcement, but we just announced a 15-week development program that will begin September 9th, and that will conclude on December 21st to end out 2024, okay? I'm extremely excited about this. The sign-up link is in bio. It is a one-time payment, and there's also an offer right now where if you do purchase your seat for the development program, you get lifetime access to my private community for a discount price. So this is a limited time offer, so be sure to take full advantage of that. But the development program, we will have live streams 7 days a week. There will be days where we will do different sorts of live streams, you know, pre-market calls, live streams while the market is open, lessons for you guys, pre-recorded and live calls, my trade reviews. You'll see my executions. You'll have a full community of like-minded traders learning all these same concepts and going through all these things. We'll be discussing trading psychology, my risk management strategy, okay, my journey as a trader in general, balancing life with trading, and how you can, you know, learn and expedite your process the most efficient way. I don't want to say the quickest way, but the most efficient way, and how you can set goals for yourself. So a complete A to Z mentorship for me. And I'm very excited. Again, that sign up link will be in the bio. I hope to see you there. If you guys have any questions about it, just leave a comment. Other than that, I hope you guys enjoyed this video, and I will talk with everyone soon.